We're good? Hello, YouTube. Hello, Facebook. West Side. East Side. We're good? Spock. We're good? We're live? We're live? We're live? We're good? We're live? We're good on Facebook. Hello, YouTube. Hello, Facebook. Just give me a moment of your time, and I will promise you that I will show you the BS, which is known as the inverted yield curve. Ooh, it's extremely bullish. The only difference between the media and myself is that I have facts. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. You know, I find it absolutely bizarre. I find it the bizarre idiocy that people feel like they could dictate where the market goes next. As it turns out, the aggregate knowledge of the entire market knows more and will do its own thing based on the market economy. What a shocker! You want to know what's causing these things in the market? BS. And I'm going to prove it to you with just a moment of your time by watching this video. You agree, told me, Mark Melnick, NT3 Live, harmless, not responsible for anything. If you don't, leave. If you do agree to that, keep watching and stay. Okay, so very, very, very simple. We've all been seeing the market volatility as of recently, and I want to just stop and ask you guys, first the obvious, and then I'll explain to you why it's all BS. What changed? What changed between today and yesterday? What changed between today and yesterday, where yesterday we had a high of the Qs? You could use anything, spiders, Qs. Let's use the spiders. We had a high of 294.15 and a low of 283.76. So yes, the spiders decided to have a $10.39 range. Tell me what happened in the market to justify such volatility between today and yesterday. And if you said absolute BS, you'd be right, but I would be more specific, a certain type of bull poop. The one given by your local outlets, your local market outlets like an MSNBC, CNBC, Bloomberg, Fox, Out News, all the news stations out there. They're all the financial news stations. I'm not talking about any of that other geopolitical BS. I'm actually just talking about the fear headlines. We're getting closer to a trade war deal with China. Great, market shoots up. Now we move down today. Why? Oh, because the yield curve is about to invert. No. Oh my God! What is that? What does that even mean? I'm so scared. So traders get spooked by this scenario known as the inverted yield curve, which really occurs when the interest rate on the shorter term bonds go up higher than the interest rate on the longer term bonds. And what that means for us people who like to speak, a language that is understandable, unlike Alan Greenspan. You ever listen to Alan Greenspan talk? Like, you would see people saying that I scored a perfect verbal on my SAT and I cannot understand 4 words of what this person is saying. Are you kidding me? That dude is a walking dictionary. He probably wrote Webster's dictionary. It should say, like, by Alan Greenspan with a special thanks to all his families on the front cover. So what happens with this inverted yield curve? It means that people are basically so worried about the near-term future that they tend to pile into safer long-term investments, whether it's the aerospace and defense sector or consumer defensive sector stocks like food, tobacco, alcohol, bonds, rates, lending money to the biggest company in the world through bonds. Okay, we get that. But just think about the deposits in your bank account, which are, let's say, in many ways, you're loaning money to the bank. Did you know that when you have money in the bank is actually investing the money? They don't have all your money there in a little box with your name on it saying, I wonder when he's going to come and look for it. You can withdraw the money at any time. Depending on how much money you want, You have to give them days notice, written or in-person notice in advance. So the bank doesn't really pay you a high interest rate because you could basically take the money out at any time. By comparison, if you lock up your money in the bank for a year or longer, you're going to get a higher rate of return. The bond market works similarly. The longer you lend your money, the higher return you'll get. For US government securities, known as the Treasury bonds, that relationship now has turned upside down. And on this morning, the yield on the 10-year Treasury temporarily fell below the yield on the 2-year Treasury for the first time since 2007. And we're going to show you I'm going to pull up a chart for you here momentarily. I'll pull up a chart momentarily. I just want you guys to understand what's happening. Then I'm going to show you why everybody on the financial media is full of anybody who approaches this subject and say it's you know conducive to a near-term recession or a future recession. As somebody who loves statistics and numerical facts, I find this deeply troubling. So the more pronounced the inversion, the more that the 2-year pays more than the 10 is a sign that people are more concerned about the fallout, for example, of the US-China trade war. At least that's what the media was telling us, and shows signs that economic growth might be slowing across the globe. So why do investors care? Because the yield curve ever since 1955 has always inverted before every US recession, although it sometimes happens months or years before the recession starts. Because of that link, substantial, long lasting inversions of this yield curve are largely viewed as a strong predictor that a downturn is on the way. Bear with me if you can't smell all the BS right there, just keep sniffing because it's going to become you could have no sense of smell. I promise you you're going to smell this. Two researchers for the Federal Reserve Bank summed it up in a letter that they published actually the other year, saying forecasting future economic development is a tricky business, but the yield curve has a strikingly accurate record for forecasting recessions. Periods with an inverted yield curve are reliably followed by economic slowdowns and almost always a recession. Okay. I don't believe that. I don't believe that, and I want to show you why I don't believe that's because I know how to count to 10 or 20, I think is why I don't believe it. But these people are obviously smarter than me. I mean, I'm a college dropout. I mean, what do I know? I mean, I can barely spell my name. Of course what they're saying is true. They're way smarter than all of us. But But what I did here was I actually showed you every single date of the start of every inversion of the US Treasury yield curve since the beginning of time and the market, as long as it existed. This is when they inverted. So right over here in I guess I'll call it gold. Right over here, it actually shows it's in red. Make it in orange there. Right over here, you have the actual month and year of where the inversion started. So you could see like December 2068, and then the recession started in January 1970. It took 13 months for the yield curve to invert before the recession started, a year and a month. The duration lasted 15 months, and the time from the diversion to the recession end was only 8 months after the recession began. Now you could just look at literally the time from aversion to recession start. So when you say this is a predictor of a recession, it's BS. Why? Why? Because there are an infinite number of things in the market and outside the market that I could point to that would also predict a recession. And I could use funny things and mathematical hilarious things, which will be just as accurate as these things predicting a recession. And then I'm going to tell you why I feel the yield curve actually inverted and why it's actually bullish. So what happens is Before these things start, sometimes it's as long as 17 months. For example, let's just see the last data we had. And the last data we have, and I'll circle it in black right here, was the 2008-2009 recession. So a lot of people want to know, or if they don't want to know, they should be asking. I'm asking, well, when did the inversion start then? And it started on August 2006. And the date of the recession started on January 8th, and it took 17 months before we were book definition in a recession. I could show you things from certain sports teams winning. I could say that there was an even number of years for every recession ever since the Mets won the World Series. I could say so many things that coincide with a simple mathematical graph of this. But I do want to point out one thing, that this inverted yield curve is due to a fear aspect. And the fear aspect is everybody likes to plug in reasons for why the market went down today. But that's just simply not true. That is simply not true. There are too many factors that brought down the market today. And if you want to try to sum it up in one sentence, you're doing yourself and the market a huge disservice. The bottom line is nothing is really changing. The whole talk was this US China trade war. Now, some of you might make the mathematical argument on them, especially on financial media, that these tariffs are harmful to our stock market. I disagree. Every single tariff that has been fully applied, the market shot through all-time highs as that was happening. So, how can you relate one to the other? People love using this news, and people get so involved in it, and people, they'll point fingers, US fault, China fault, and I'm sitting there thinking to myself, who gives a crap whose fault it is? The thing you could do in this environment is change the way you trade and be prepared for it. Are you surprised that the market started just randomly shooting up by 10 o'clock today after there was talk that there was going to be, you know, that US might meet halfway there of the China US trade war, China tariffs, like they'll meet halfway through the talks? Ooh, the US is, the US is bulging. They're moving. They got shook. They blinked. They hoodwinked us. I mean, you insert the color, whatever. And I'm sitting there thinking to myself, that's exactly what we are prepared for. There's going to be situations where people were long a bunch of positions, got caught in that, and made money, and there's going to be just as many, usually more people, who are caught in the other direction short today. How many of you guys had short positions on when the market just randomly spiked up? It potentially shook you out of your shorts, and then you watch the market drift all the way down today. I'll even show you how it looks like, and I could even tell you our strategy today was just to short anytime something moved up. I was actually looking to short the spiders through the first test of the exponential 8 moving average on the 5 minute today, and I missed actually that trade and it went down, and I moved on. That was it. That was it. Did very little trades, made money, made money yesterday. I'm making money in this environment just about every single day. Just about every single day. Why I tell you this is not because of shameless boast, but rather because the show is about to come to an end, because I'm going to focus in on my room and try to bring everybody who is not on that level one step closer or to that level. And that's what I'm going to spend my time with. But of course, I do want to, I just wanted to tell you that bullish moves have happened more often after the curve inverted as opposed to bearish. It's taken months. Now, that doesn't mean we won't correct. The more we correct, the more people will be talking about this inverted yield curve. But it's scientifically and mathematically untrue. To say that has proceeded every single recession, I could argue that every time India sends a satellite into space, that you're more likely to get a recession sooner. How's that? As opposed to the inverted yield curve. What does that have to do with anything? Exactly. The inverted yield curve means absolutely nothing, just like people buying into VIX products mean absolutely nothing. It is a fear index, and when you get headlines that talk both sides of the coin, we're going to meet a deal. We're going to throw the tariffs on. We're not. We are. We are. We're not. We're not. China's like, we're going to buy goods. We're not going to buy goods. We're going to buy goods. We're not going to buy goods. And both sides of the table are, saying the exact opposite things in the same sentence, and the head is spinning. So we need to find ways to be in positions for shorter amount of times, not longer amount of times in an environment like this as intraday traders because of the random volatility and the fact that you are subjecting yourself, ladies and gentlemen, to that next tweet. So for example, if I'm in a position for 10 minutes and you're in a position for 3 hours, who's more likely to be in a position when that headline from the South China Morning Post or that tweet comes out or something out of the White House or US government or Chinese government or wherever it is? Where are you more likely to see that? Where's that more likely to affect you? When you're in a position for 10, 15 minutes or you're in a position for 3 hours? Now that is mathematically proven. See? Unlike the inverted yield curve, which ends up being just a talking point to make investors feel like someone smarter is looking out for them. In actuality, here is what the spiders actually do. Just real quick, because I'm going to leave you guys. I want to spend time with our room. But this, just for you guys, all right, you see, I could make an argument that bull markets start every time within 2 weeks after every time the spiders hit the Bollinger Bands, that you'll have a huge bullish move in the market. You might be like, huh? Here's a daily of the spiders. Every time the spiders break down these Bollinger Bands, especially for like a few days in a row, you always get a big pop. So yeah, we were the people buying in a bunch of positions on August 5th. Do you remember that, ladies and gentlemen? And we caught the guy, and the futures were down huge overnight. We thought we were going to come in down money, and it was like, boop, nope. Haha, you're up. This is a market that is psychotic. This is a market that is conducive to shorter term trades. Quick profits, quick losses, low size. That is what this market on the intraday scale is about. Now, yes, recently we had a 3 out of 10 in Roku, and you guys crushed it. Look at your P&Ls on Monday, you Newsbeat Live members, because we finally had a conviction name. Why? Because an analyst came out. God bless her, right out of Needham, and put a $150 target on Roku. That's like her coming to the Newsbeat live room and saying, okay, guys, I'm going to pay you out today. That's what it felt like. These last 2 days, not so much. In fact, I even took Roku puts last night, just a lotto into today. Sold it out. Just minor, nothing major, just easy. Just out. That's it. Caught the gap down with the market. That's it. Didn't do any overnights tonight. But I just hope you guys enjoyed it. And here, just do me one last favor. This video has probably between 10 and 20 dislikes within the first 15 seconds of this video starting. As we're growing to the proportions we are, there's a lot of jealousy around us, especially from other people in our industry. So you got to be, a fighter against trollism. Thumbs up this video. I encourage you to. We don't even monetize on it, ladies and gentlemen. I do not monetize. I do not make 1 penny from YouTube or Facebook by showing you this video. But I want the trolls to know out there that people who like the truth, people who like the videos that we do here, you know, always straight shooter, always say it how it is, rather be right, rather be wrong, but always tell you ahead of time the honest facts and my feelings behind everything. So if you like these sort of videos, make sure you go and thumbs it up. Newsbeat Live members, just go and thumbs this video up as well. I hope you guys enjoyed the nonsense of the inverted yield curve. Happy trading, make money. And I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening. Wait, Mr. Melnick, we want the levels! Here they are. These are tomorrow's levels today. Pause it, screenshot it, enjoy it. Have a wonderful evening.